guys, Brian Stevens here for the National Real Estate Post. As you know, I got Chris Martin, who's the co-CEO over at Oak Tree Funding. They are our favorite non-QM lenders out there. Great
Only
pricing.
because we're the best.
Yeah, they really are. Been around a long time. They know how to do this. They know the ropes. Their pricing's good. They price match, which means you always know that you're going to get the best pricing when you're working with these guys. They're fantastic. Chris, how you doing today, man?
I'm great. It's a beautiful day in Arizona. Be in the 70s today. I'll have to worry about getting my jacket back on. I'm wearing shorts to the office again, so it's perfect. It's a great day.
Yeah, it's pouring here. So hopefully I've had enough rain. We've done well in California. Let's get to the point here real quickly. You guys are doing so much good right now. The first question I want to ask you is, you're seeing all this run on the banks. They're saying it's a black swan event. Like, this was unforeseeable 6 months ago. And I would say, well, when you look at the Fed policies, this was totally foreseeable. What's happening with banking right now? Is that having any effect on non-QM? We had those issues about a year ago. Is this affecting your products or your underwriting guidelines or anything like that right now?
No, I mean, as soon as I say no, I'll get a knock on the door and someone will say something's happened. But not as of right now. Our products have not changed as a result of that. Our financing structures haven't changed as a result of that. We finance with mid-level banks. They provide our warehouse lines to us, and we haven't had any issues. We are still at the same advance rates, still at the same funding rates. I guess I'll knock on wood, but we bank with fairly conservative banks who kind of hit down the middle of the fairway. And I'm not an economist, and I'm not going to pledge to tell you everything that happened. All I know is that when a lot of people start to try and pull a lot of money out, and your assets are being held in what's called safe securities, treasuries, and you have to sell those at a discount, it's going to make things difficult on you. So I'm not sure if the right move would have been there or not, but nothing so far on our side. And for the record, our investors mostly aren't banks. Our investors are mostly fixed income investors, insurance money, those types of things. I'm sure that there will be some rippling effect in the bond market just because of, like, for example, the Credit Suisse's AF1 bonds or whatever they're called. They defaulted on that. So that'll probably have some rippling effect in the bond market, but it has not made its way to the non-QM securitization market. The last securitization that was done kind of as that was happening, and it looked like it was a pre-priced deal, more of a private deal than a fully public one. So we really don't know what the prices were on it, and we won't know until somebody else does a securitization what the effect was on that. So, but nobody has priced any new loans out like it's been a problem. So the rates have been fairly flat.
Interesting. Now, I just did a show a couple of days ago, and I was saying how your agency loans, your Fannie Freddie loans, they're exclusionary in nature. They're saying who they won't give a loan. They're trying to find a way to decline your loan. They're not going to do it for self-employed people, contracted worker, 1099 workers, that type of thing. Whereas when you look at non-QM, I don't like the term non-QM because I don't think it accurately describes what you guys do. Non-QM is looking at market conditions, and they're looking at borrower profiles, who's not getting loans, all those excluded people from your agency loans, and they're building responsible products around these clients and around market conditions in order to get people into loans. Very much inclusionary in nature. I think we should call them inclusionary loans at this point.
I'm going to talk to Tasia. We're going to change the branding.
Well, then the other part of it is we saw existing home sales go up for the first time in 13 months. How's the business going right now for non-QM in general? Is the market, in spite of where we're at, is it going up? Is it stable? Where are we at?
I got in the business in 2001, just right before 9/11 hit. When I was interviewing for the job, I was interviewing with my now business partner, Steve, and he asked me, why do you want to get into the mortgage business? And I said, well, because I know one thing's for certain. No matter what happens, everybody always needs money. Everybody wants to buy a house. They need to refinance. They need to pull cash out. There's always a need for people to have money. So that's one of the reasons why I got in this business. That's why I then got into subprime. And I learned as much as I could every second of every day about how loans work, how things get put together, how the secondary markets work. Because in the end, what I wanted was, what we've done here is, we write our own guidelines, we create and structure products, just like you mentioned, based on the needs of the borrower, based on the needs of our clients, and based on the needs of our investors. And we try and put a product out there that's fair, competitive, reasonably priced, and then it's a product that we can sell. It's an investment quality loan. We make sure we do our due diligence, and every I is dotted, every T is crossed. But it allows us the flexibility to make exceptions. It allows us the flexibility to go to different investors that have different things that they like. We have competitors that are single securitization outlets. So, for example, what that means is that I'll just use that other Oak company as an example. They originate loans for their own portfolio, and then they securitize those loans. They don't really have a distributed network to sell those loans to. The best part about, because Oaktree's a private company, because we're not beholden to any investor, we have not taken any cash from anybody else, we're able to sell loans to whoever we want to, whenever we want to. We structure forward agreements with our investors. It gives us flexibility to sell to them or to sell away, so that protects our pricing for all of our clients' benefits and our benefits. But it also gives us the ability to sell to whoever we need to. So that's this is way off base on where you the question that you asked. But,
sure, no, that's good though.
But we are, that's the best part about working with Oaktree, is that we find a way to make deals happen, even if it doesn't meet our guidelines. We had a deal. We do deals all the time, but we had a deal. I was working on a deal yesterday. It was, our guidelines have a hard stop cap at $3 million for that loan to value by FICO score. I've got another investor that goes up to $3.5 million. Well, we just shifted the loan to that other investor, and they took the deal. $3.5 million. We're just able to make deals work. We're able to kind of turn on a dime, so to speak, and make deals work, even in areas or avenues that others might just, we can't make that exception. Sorry, and that's it. They can't go to other takeouts and make things happen. So, because of that, we've seen our pipeline has really been growing. We've had our guys are really connecting with a lot more loan officers. They're doing trainings on a regular basis for folks, so that they really understand how these products fit. When you're selling a commoditized product like an agency loan, that's it. It's either DU says yes or DU says no, or LP says yes or LP says no. Very few loan originators are doing manual underwriting, FHA, VA. A lot of lenders shy away from that because that means they own the risk differently than if they were to have just used an AUS tool. So, because of that, there's already going to be so many people in this box for brokers and loan officers that want to make money. They have to figure out, okay, what's next? How do I help more people? How can I find different ways to help other people qualify? And we've had a lot of success. Sonny, one of my guys, used to work as a sales manager, a VP of sales over at Loan Depot. And he's got a ton of loans closed this month, and he's got a ton in his pipeline, not because of any other reason other than he takes the time to explain to his LOs, this is how you close non-QM loans. This is how you go out and get the business. This is how you sell the business. And all of our guys are able to do that. And all of our guys are doing it and killing it for their customers because of the focused training. They really help these guys get up to speed. So we're not just doing business with guys we were doing business with. We're doing business with a whole new group of people that never did non-QM lending before. And they're making a killing at it because we're helping them look at their marketing. We're helping them look at their target base of clients. We're helping them work more directly with their realtors. And they're just having that success because of it. So, well,
I mean, let's just put our cards on the table here. One of the main reasons we're having this conversation right now is we want those who are watching this video, who are frankly struggling with their business, look at different outlets. Just look at different ways that you can approach your business. These guys they'll train you up. They'll teach you the product forwards and backwards. I just had a conversation with a guy yesterday. He goes, I need to learn more about these products. I'm like, where have you been? The other point that we covered a lot of ground there.
Sorry. You asked one question. I went on 3 tangents. So
no, it's all good. The other point, I can't stress this enough, guys. I can't stress this enough. When you're placing your non-QM deals, your non-agency loans, and you're working with your typical A-paper, agency, Fannie, Freddie, Jenny lender, those loans go into automated underwriting, and they're going to underwrite to the findings, and that's it. I bring this up because I remember writing loans where we actually had an underwriter sit down and we could beat them up on guidelines and have a conversation, and we could make exceptions, we compensating factors and all this stuff. Those days that horse is gone.
And for years, that's 10 years. I mean, you can't make exceptions on conforming loans.
Right.
If it doesn't meet the US, because if I'm a lender, if I'm a lender and I'm going to write an agency loan and the government says to me, look, if you do what I tell you to do and you do it this automated way, you're not going to have any liability as far as the income results go. You're not going to have any liability as the property results are. And you're not going to have any liability based on the assets because you're using day one certainty and things like that. Why would I do anything else?
Right.
Because the margins are paper thin. They're razor thin. So how can so there's no money in it. Why would you take the risk?
But what they've done is they've taken that mindset over to their non-QM. Yep. So when you're going with your agency-based company where you're going to place your loan, you're going to get what those findings are, and that's that. It's a line drawn in the sand, and it's not to be crossed. Yep. The great thing with companies like Oaktree who focus on non-QM is they actually have underwriters. who can actually make exceptions. So if they have a deal that makes sense, but it doesn't necessarily fit perfectly into its place according to underwriting guidelines, they're going to find a way to be inclusionary. As I said, they're going to find a way, or they're going to try to find a way to get your client into a house. And that's a wildly different mindset. And what it does is it gives you a fighting chance with clients that you simply don't have that opportunity with when you're sending this to your agency-based lenders. You guys keep that in mind. It's hugely important. The second thing, and again, I'm just reiterating, is what Chris said here is they'll train you up. Sonny's training his people up. We are looking for people who want to take their business to the next level. And if you have the desire and the gumption and the fortitude to do this, they will sit down with your team. They'll sit down with you individually, and they will go through the products, and they will go through different ways to market these things so you can increase your business. The question you have to ask yourself is, do you have it in you to change your habits to increase your business during these lean winter months? And it's such a great opportunity, and I would love to see more people take advantage of it. Last point I want to get.
We do trainings every day. We do trainings every day. I want to circle back. We have a client. Sure. I'm not going to name them, but they offer, as a banked product, they offer non-QM, and their people don't use it because it's too hard to get a loan done. Their people have told them, we don't want to use your non-QM product because it's too hard to get the loans done. They would prefer to work with us or others that focus specifically on non-QM just because that's our focus. To your point, you take an agency underwriter that's been doing agency lending for their inside, because they don't take government underwriters, because government underwriters they just do government loans. So if you have a good one, you don't take them and make them a non-agency underwriter. But if you have a good, you got a good conforming underwriter, you could pluck them out and say, okay, you're going to do non-QM loans. And if it doesn't meet the guidelines, first of all, if it looks crazy, they're going to stip it to death, because they're going to be like, what is this? And it's gonna be a problem. And that's what happens. That's what we found with a lot of different, even in-house big A-paper companies, like names you'd know, billboards and stuff, you'd know them if I said their names. They do not prefer to do non-QM in-house. And they've got the balance sheet, they've got the, they could do all the stuff, but they just don't have the expertise because that's not their focus. Their focus is volume. And it's very difficult to do a volume shop doing $1 billion a quarter, $1 billion a month in volume when you have to look at every single loan and make sure that it's going to qualify.
Yeah.
You can't just, the days of the subprime back in the day where it used to be, you could if you're going to buy a pool of loans from me, I could send you $100 million tape and you're going to look at $10 million worth of loans. You look at 10% sampling. Every loan is looked at now. Every loan that goes into a securitization has to be reviewed by a third-party due diligence firm. So you have to make sure that you're doing what you if you don't, and you can't do, so they can't do that. They can't do speed, size, and detailed looks into files just because it's just not their model. It's not their business model. Nothing wrong with their business model. That's just not it. So those loan officers tend to, on a more frequent basis, broker loans out to people like Oaktree because we just get it done faster for them. We know what we're doing. We know what we're looking at. We're used to doing it. And we can get it in and out very quickly. We're still turning loans same day or next day. I mean, our pipeline's growing, all the technology. I remember, if you remember back about a year ago, we were starting to talk about our technology enhancements, and it's like, oh, well, volume's gone down, so of course you're going to be faster. But, our volume has been increasing, picking up every quarter, every month, every week. And, our turn times are still, we're banging files out. We have our income desk, we've got all that kind of stuff. So we're clipping through files at a pretty high rate. So
that's awesome.
Not gonna stop.
That's awesome. And listen, if you're a realtor or lender, just do yourself a favor. Like, you're watching this right now. There is a banner that is dynamic that's right here, right around what you're watching. Yep. Click it and fill out the information and have one of their account reps reach out to you. I mean, take your business to the next level. The question is do you want to do it? Do you want to go ahead and thrive in these stark winter months? These guys will help you out. Just take advantage of the opportunity. It's right here. It's free. All it's going to take, it's not a cost of money. It's a cost of intellect. Are you going to be able to absorb what these guys are talking about and then execute what they're going to share with you?
And there's no gimmicks. Yes, you're going to talk to an AE and they're going to call you and ask you for business. But the truth is, send us business, don't send us business. We want to help grow the non-QM market. So come get trained. We'll help you. We'll show you how to make money on the non-QM side. You're going to want to send us loans because we're fast, we're quick, and we know what we're doing, but there's no requirement. So, well,
it's a win-win. I mean, if you close more deals, they do better, you do better, everyone does better. Yeah. It's a win-win.
Exactly.
So listen, the only variable that's missing right now is you. So reach out. Let's do this thing, guys. Chris, thank you so much for your time. Let's keep this conversation going.
Absolutely.
All right. Thanks a bunch, man.
Thanks, buddy.